Hello and welcome to Zee Commodity Capsule. All the global commodities are trading in red with firm dollar index and because of the US and Chinese market being on holiday, which has resulted into thin trading volume. Let's start with gold prices, which have extended declines for second consecutive session and currently are hovering close to 6 February lows. We have seen gold futures on COMEX dropping to near $4,900 an ounce, down more than $100 amid thin trading volumes due to local public holidays in key markets, as I mentioned previously. Markets in China and several other countries in Asia remain shut for Lunar New Year following a holiday in US on Monday. Now, softer than expected US inflation data, which was released last Friday, has boosted the expectations for further monetary easing by the Federal Reserve this year. Traders are currently pricing in slightly more than just 2 rate cuts, with July seen as the potential rising the starting point. Investors are now awaiting Fed meeting minutes, which happened in the month of Jan, the advanced estimates of US GDP and the PCE inflation data for clearer guidance on the policy outlook. All these data, the economic data, are expected to be released this week. Geopolitical developments continue to remain in participants' focus. US-Iran nuclear talks are set to resume later today amid elevated tensions, while the negotiations between Russia and Ukraine also scheduled to begin against the backdrop of the ongoing fighting. Oil prices continue to be steady to weak on Tuesday as investors assess the risk of supply disruption after Iran conducted naval drills near the Strait of Hormuz right ahead of the nuclear talks with US later in the day. We have seen Brent crude prices hovering close to $68 a barrel, while US WTI crude was at around $63.5 a barrel, but the move included all of Monday's price action as the contract did not have a settlement that day due to US President's President Day holiday. Now, many markets are also closed on Tuesday, as I previously mentioned, particularly China, which happens to be one of the biggest market movers as far as commodity markets is concerned. Meanwhile, we saw US President Donald Trump said on Monday that he would be involved indirectly in the talks in Geneva, adding he believes Tehran wanted to make a deal. Meanwhile, we have seen Citi said that if disruptions to Russian supply keep Brent in $65 to $70 a barrel in the range in the coming months, and OPEC Plus is likely to respond by increasing output from spare capacity. Copper prices have softened to 2-week low on Tuesday as a firm dollar coupled with increasing inventories and weak demand continues to pressurize the red metal. Copper on LME dropped below $12,800 a metric ton, which happens to be its lowest level since 2nd of February. China's Lunar New Year holiday this week means low volumes and possibly volatile moves due to settlement or rollover of maturing contracts on London Metal Exchange this Wednesday. Dollar held above 97 mark, which again is pressurizing the industrial metals along with precious metals, of course. Copper stocks on LME approved warehouses increased by nearly 8,000 ton to 2,11,850 tons on Monday, which is its highest level since April 2025. In fact, BHP Group, which is world's largest metal producers, reported stronger than expected half-year underlying profit driven by copper, which, by the way, for the first time surpassed iron ore in the top global miners' earnings. Also, zinc prices is where you need to keep your eye on because the prices have dropped on London Metal Exchange for 4th straight session to near $30 to $50 a ton, which happens to be its lowest level in 3 weeks.